Hello, and welcome to the channel TT Forex. This is your boy TT. Today in this video we're going to talk about how you can improve your price action strategies. In the long run, you have to improve them because markets are always changing, and you might find out that your strategy is not working that well in the long run. So first of all, you have to stop memorizing candlestick patterns. Those fancy names, hammers, shooting stars, whatever, they do not give you the edge over the market. All you need for you to get an edge over the market is the story behind the formation of that candlestick. If you memorize them, you're going to confuse them for something else whenever they happen to be formed in areas they are not supposed to be formed. So stop memorizing them. Just know the story behind the formation of that particular candlestick. Then that's the edge you need over the market. For you to understand those stories, just try to create analogies, funny analogies, funny examples of what's really happening in the market during the formation of that candlestick shape. I mean, those analogies are something you will be able to understand in the long run, for you to be able to read the story of the market. Remember, the formation of a candlestick is a sign language. The market is trying to communicate with you, is telling you something, so you have to understand that whisper, that sign language the market is producing through a candlestick formation. So memorizing the candlesticks won't give you the story behind the candlestick being formed at that particular place. So you have to know the story relative to the market structure. Multiple time frames. Please stop confusing yourselves, especially if you're a beginner. I've been there. I had charts all over the place: 5-minute chart, 1-minute chart, daily, weekly, monthly, and trying to analyze them at the same time. That's quite confusing, to be honest. You're going to explode your head for nothing. Only stick to 2 time frames. I think that's the best. It has worked for me, and it's still working wonders. I only need 2 time frames: the higher time frame for analysis and the lower time frame for entries. That's it. I do not confuse myself, so please do not confuse yourselves, actually, because what you need is just the price, where the price is, where the market is. Having 5 charts at the same time does not even change where the price is, you understand? So at least if you have 2 time frames, the higher time frame just to see the market structure, or what it is doing at that point of time. Is it in a downtrend, is it in an uptrend, or is it just ranging? That will give you a sentiment as to what will go or what is going to happen next. So by that, the higher time frame is for analysis. Determine whether it's a downtrend, whether it's an uptrend, or just a ranging market. And then the lower time frame, you use it for entering the market, pinpoint exactly where the market is turning, you understand? Like just look at it this way. The higher time frame, you zoom out, you're zooming out, you're taking yourself out of that situation, out of that jungle. You zoom out, you stand up high in the mountain, look down the veld, just look at the broader picture, you understand? And then take those binoculars out, zoom in to see what's really going on in that jungle down there. So that's exactly how I look at it. Higher time frame for analysis, lower time frame for entry. That's it. Areas of value. You do not want to just trade from anywhere on the market. Do not just take trades from anywhere in the market. Look at those key levels in the market where everyone is looking at. That's the reason why I look at the higher time frame, because a support level in the higher time frame is always a support in the lower, in all the lower time frames. For example, if you have a support level in the daily time frame, in the daily chart, I think it's going to serve as a support, or a resistance on the lower time frames as well, rather than having that a support level on the 5-minute time frame. It's not necessarily a support or any key of significance in the higher time frames. So look at those support, resistance, Fibonacci ratios, moving averages, trend lines. Those are the areas where you would want to see those memorized candlesticks being formed at those key levels. That's when you will be able to take those trades with the confidence, I mean. So please do not just take trades based on a hammer being formed and in the charts from anywhere in the market. Is probably a retracement or something. So do not take trades away from areas of value. Your entries, like I said before, I use the lower time frames for entries. That's much more profitable because it gives me a tight stop loss, and my risk to reward ratio is increased, you know what I mean. So I will be looking for those memorized candlesticks, my shooting stars, and things like that in key support and resistance levels, Fibonacci ratios, trend lines, whatsoever, to enter the market. And then sometimes I use trend line breaks on the lower time frame to enter my trades. The exits. As for targets, you can aim for the nearest market structure, support, resistance, trend line, Fibonacci extensions. Most people use them. Trailing stops, this is my favorite for a number of reasons. Risk to reward ratios, yes, I use risk to reward ratios, especially if I want to trail the other trade, because I always use 2 entries. I set a risk to reward ratio of 1:1 on the first trade, and then the other one I trail the stop. So those are the kind of things you would like to consider as well. Managing your trades, like I said, I use 2 positions. Put a target on one and then trail the other. So you can consider maybe not trailing the other one, target 1:1 on the first, and then target 2:1 on the other one. So it's all up to you how you manage your trades actually. And then managing your risk. Do not bet the farm. You will need the farm in order for you to milk the cow. So please do not risk too much. I always make sure that I risk a maximum of 2% per trade. Just because I use 2 entries on a trade, I always make sure that I divide that 2% risk by 2, which means each trade is going to have 1% risk. That's it. Because I do not want to bet the farm, because if I lose my farm, I'm not going to have the cows to milk tomorrow. Like the old adage says, live to trade another day. That's exactly what I would like you to do as well. Do not risk all your money on one trade. You are going to lose your money, because each and every trader in this market has lost a trade once or often in their lifetime. So losing is real in this market, so do not risk too much. With that said, I think this is the end of this presentation, guys. I hope this was so informative to you. So please subscribe and hit the like button.